Kevin Hassett and former Fed Governor Kevin Warsh. The officials described a, quote, deliberative process now taking place where Treasury Secretary Scott Bessent will interview all the candidates, winnow down the list, and pass it on. The officials described a, quote, deliberative his decision. The size of the list and the process described suggest a decision is not imminent, but the officials would not offer a timetable. The longer this takes, the less likely there is to be a so-called potentially disruptive shadow Fed chair in place for several months before the chair's term ends. Though sharply critical on an almost daily basis of Powell for his failures to lower rates, President Trump has recently backed off the threat to fire the chair. And many of the candidates, they've advocated for rate cuts and reform at the Fed, but have also supported in different ways the Fed's independence from the executive branch. Guys, tomorrow, right here on this show, Squawk on the Street, we'll be live from St. Louis for an exclusive conversation with St. Louis Fed President Alberto Musalem. Guys?
Steve, just want to go through all the openings and the options that the president is going to have with the Fed, right? Steve, he's just appointed Stephen Myron to finish out the Kugler term, but then theoretically, if he doesn't reappoint him, that's an opening as governor, right? And then there's the Fed chair position next May, but Powell may stay on as governor. So can you just talk about how many options he has here with all of these nominees and ideas?
Yeah, I mean, my expectation is Powell will not stay on as a governor. I think he'll follow the tradition of the chair stepping down from both positions, stepping away from the board, and perhaps enjoying a little time off after several tumultuous and very difficult years as Fed chair. So the president will have two open seats is my expectation. I also understand that the more permanent replacement for the Kugler position being occupied by Myron will follow the decision on the Fed chair. So that will come later. And so at the end of the day, the Fed chair will have, depending upon if there are other people who resign, 4 of the 7 board seats. So he'll have a good majority there. And whether or not those board seats are followed by or supported by in their rate decisions by the presidents, they could be more dovish than otherwise expected. But what's interesting, Sarah, look at the trade in the market. The 2-year obviously has been dovish in terms of the outlook for the Fed. 10-year, a little bit more circumspect, a little bit more sort of stuck in that zone, as you see there. And looking at the Fed funds trade, there's a 100% chance of a rate cut in September, but now a little bit of tiny toying with a possibility of a 50 in September.
I'm looking at Polymarket. Waller's still got the lead, 32% odds on that. Thank you, Steve. Steve Leisman.
Let's get to the broader markets on this very strong tape as the S&P and the NASDAQ hit some fresh record highs. Our senior markets commentator, Mike Santoli, is with us to break it down with the VIX briefly flirted with maybe a 13 handle.
Yeah, I mean, look, I mean, when these rallies really kind of squeeze out all the bears and run to their fullest extent and start to rotate to include all those other stocks, I mean, seeing VIX in the 12s would not be weird, because that's kind of where you get to in late summer trading if the tape is going to stay in this mode of just rotating away from any danger. Really jailbreak rally yesterday is the way I would put it. I mean, even though people weren't really bracing for something terrible on CPI, because it would have taken a hugely adverse surprise to the upside to offset the downside surprise of the payroll report a week ago Friday. I do think that you basically had this reserve of caution, a what if.
There were
and now
whispers that would be
the market's forcing the view that we're looking through the inflation numbers, and you're going to get the rate cut in September. And so that playbook was executed, right? By small caps, by lower quality, by cyclicals, by banks, all that was happening. Meantime, you obviously have the animal spirits trade revving up again with the IPOs, with the M&A story. Credit spreads are super low. It's fascinating, Sarah, because you were saying, you know, before the consumer is not really flagging. There's not a lot of fatigue in the numbers. If you look at the equal-weighted consumer discretionary against the equal-weighted S&P, it's now outperforming again. So the question is, why are we insisting this economy is screaming out for rate cuts? It's because you can't kind of take away the rate cut expectation from the way the market is positioned right now, right? If we weren't going to get rate cuts in September, maybe discretionary wouldn't be outperforming the way it is. So it's a little bit of a sort of self-reflective type market right now. I do think you could look at regional banks versus money center banks. and say there is a part of the economy that it's like the prime rate economy. I used to call it the LIBOR economy. We don't have LIBOR anymore. But basically, it's basically the bank loans that are based on what the Fed is charging the banks. That has lagged, and therefore, home builders have lagged and such. So maybe that's part of the economy that needs repair, or the Fed wants to get out in front of it.
Housing economy. Look, I don't think it's that that the economy is screaming for rate cuts. It's that the Fed has by itself said that it's restrictive right now, that rates are high. And if risks are tilted to the downside with tariffs and everything else, and now we're starting to see the labor market crack a little bit, then they should just get ahead of it and start cutting rates. So cutting rates at a time where the economy is not collapsing is kind of Goldilocks for the market.
Of course, and that's why the stakes are so low. I mean, it's for all the drama about who's going to be the next Fed chair and why didn't they do something in July. The stakes are not that high because all the numbers are converging in this direction of pretty much anybody is going to say let's tweak rates lower when it comes September if we don't get an upside inflation surprise. So I feel like, it's all pointed in the same direction, and we're here, doing Hollywood squares on who's going to win, the job out there. So.
All right, Mike, thank you. Mike Santoli, always putting it best. Here's our roadmap for the rest of the hour. After the break, Goldman Sachs chief U.S. economist David Miracle will join us as President Trump slams the firm's research and its boss, David Solomon.
Plus, a key player in quantum. We're going to be joined by the CEO of Rigetti Computing, the stock of which is up more than 1,600% just over the last year. And just how serious is that $34 billion bid by Perplexity for Google's Chrome browser? We'll talk about it with former FTC Commissioner Moselle Thompson as the big show continues. Walk on the Streets back after this.
Learn more. Welcome back. President Trump taking aim at Goldman Sachs economists and CEO David Solomon in a Truth Social post yesterday, writing, quote, David Solomon and Goldman Sachs refuse to give credit where credit is due. They made a bad prediction a long time ago on both the market repercussion and the tariffs themselves, and they were wrong, just like they are wrong about so much else. I think that David should go out and get himself a new economist, or maybe he ought to just focus on being a DJ and not bother running a major financial institution. This in reaction, of course, to a note on tariffs from Goldman Sachs. The economics team, led by Jan Hatzius, citing that U.S. consumers have absorbed 22% of tariff costs through June, but that their share will rise to 67% if the recent tariffs follow the same pattern as the earliest ones. Joining us here at Post 9 is David Miracle, Goldman Sachs chief U.S. economist. What was the reaction on the economics team yesterday to this post?
Well, look, we stand by the results of this study. I think it's very early to be drawing definitive conclusions about how tariff costs will be shared. But in principle, tariff costs can be borne by foreign exporters, by U.S. businesses, or by U.S. consumers. Now, we've had tariffs in place on that very first round from China for about 5-6 months, so I think we have learned a little something. Our conclusion is that U.S. businesses have borne most of the tariff costs so far because it takes time to negotiate lower import prices or to pass price increases along to consumers. But if the most recent tariffs, like the April tariff, follow the same pattern that we've seen with those earliest February tariffs, then eventually, by the fall, we estimate that consumers would bear about 2/3 of the cost, foreign exporters would bear about 1/4 of the cost, and U.S. businesses would absorb less than 10%. That probably sounds small, less than 10%, but bear in mind that is a net number. If you are a company importing or using goods to sell in the U.S., you're going to get hit harder. If you are a company producing in the U.S. who is now protected from foreign competition, you can raise your prices and benefit. So those are our estimates, and I think actually they're quite consistent with what many other economists have found.
So our debate has been about whether or not the consumer at this point is so fragile that they won't absorb those price increases, and it'll fall on the company once again. The U.S. importer. Why wouldn't that happen?
Yeah, I think there will be some split. What we generally saw in 2019 was that a surprising amount fell on consumers, in part because companies did pass along much of the cost, but also in part because there were additional spillover effects, where again, if you're protected from foreign competition, you take the opportunity to raise your own prices. I agree with you that the consumer looked fairly fragile in the first half of the year. Consumer spending growth decelerated a lot, despite the fact that real income growth still probably quite a bit sturdier in the first half than it's going to be in the second half. Job growth is slowing, so labor income growth will slow. We got some one-off Social Security back payments that we're not going to get again. And as tariff effects on prices continue to accumulate, that will further erode real or inflation-adjusted income.
I guess the problem the president had with the research is that everybody expected this all to be very inflationary when he announced tariffs. And so far, we've had inflation report after inflation report that has not shown it feeding into the overall headline rate. I mean, a little bit of tick up here and there, but it's not. I mean, you have to be surprised that we haven't seen it in a bigger way. That's why the market is rallying now on the idea of a cut.
So one thing that I think we've learned that maybe I didn't fully appreciate is just that for very mundane reasons, there are implementation lags that delay these effects. Anything that was on the boat is exempt. That gets you from that big April 9th reciprocal tariff about a month into May. And then Customs doesn't charge people every day. Sometimes those payment lags can be another month. So to expect to have seen all of this by June and July is just a little premature. We think so far the effects, I agree, have not been huge, but are worth about 0.3% on core consumer prices. That is a little bit smaller, actually, than the Fed's estimate. Their estimates have been a bit larger than ours. But I do think most of the impact is still ahead of us. I'm not worried about it. I think, like the White House, like Fed officials, we would see this as a one-time price level effect. I see the inflation picture as a two-part story. You have a falling underlying trend, leaving tariffs aside, that is moving back to 2% for the same reasons it has been for the last 3 years. But I also think that these tariff effects will push in the other direction, probably push inflation above 3%. I don't think this will matter a whole lot to the Fed because now they have a labor market to worry about. And I think that's going to be the dominant concern.
Core CPI, 3-month annualized. Has it not gone from 1.7 to 2.4 to 2.8 in 3 months?
There's a lot of volatility in these numbers. That's right. I think a very simple way of looking at this, we and the Fed, of course, have complicated econometric models where we try to trace out the impact of tariff increases at the very granular category level, controlling for other factors. But a really simple thing that you can do at home is just look at how core goods, which are affected by tariffs, have deviated from their pre-tariff trend versus how core services, which are barely affected, have continued to decelerate, as they have again for the last couple of years. That gives you at least a very rough.
Core services were the reason that the core moved up yesterday in the report. It wasn't as much as goods.
That's right. So services were a little bit firmer. And I think, it's a good illustration of the volatility we deal with every month that doesn't really fit any broader narrative. We have volatility in airfares. We had a jump in dental services. Kind of a strange thing, but that sort of thing happens.
David, most people come to work every day in this country without the expectation that the president is going to publicly post that they should be fired. I'm just curious, did it send a chill at all through the team yesterday and your economics team? Does it change the way you do anything or look at anything or interpret the data?
We're just trying to do the best economic forecast that we can for our clients, and we publish research reports like the one that we published over the weekend to inform those views, and we will keep doing that.
All right. Thank you for joining us and for commenting on it. We appreciate it. David Miracle, the chief U.S. economist of Goldman Sachs.
Later on this morning, don't miss the CEO of quantum computing, darling. Rigetti shares up 1,600% over the last year. And in just 2 minutes, the streets take on some new numbers out of CoreWeave, which is sending shares down almost 14% this morning. Don't go anywhere.
BC Plus.
CoreWeave on the move. Losses widening as the company tries to meet what their CEO is calling unprecedented demand for AI. Shares getting a hit on the earnings report. Christina Partsinevelos here to break things down. I guess it's a good problem to have, Christina. Stock's down, though, 14%.
Yeah, I'll get to why specifically, but the company did beat revenue expectations by 12% and locked in expansion deals, they said, with two major hyperscaler customers. The bulls will say solid execution in this AI infrastructure space. Definitely a lot of bullish notes out this morning. But as you can see, the stock is down quite a bit, down 14%. No, not so much on fundamentals as it is about timing. Shares have absolutely ripped higher, about 120% gains since the last earnings report. And that kind of run up really sets a high bar. And now this is the key. We've got the lockup period expiring later this week, considering that the company just IPO'd this year, which means a flood of previously restricted shares could hit the market this Friday AM. The numbers from the report tell a mixed story. Yes, revenue growth was strong, but CoreWeave and you mentioned that in the intro, is spending heavily to capture that growth. We're talking about 4 to 5 times the revenue in capital expenditures. That's been the known trade-off here, though. That's again what the bulls will say, and it's why margins keep getting squeezed in the near term. Citi noted that while the OpenAI contract they talked about was already announced, new backlog additions were modest at just 200 million. So net new only 200, even though the company talked about a much higher number. Expect volatility as these lockup shares to really just get absorbed. But the AI demand, to your point, really just, according to them, remains intact, with demand still outpacing supply. But the reason you're seeing such a drastic sell-off are two reasons: the high bar set prior to earnings and the lockout period. So wait for that to flush out, and then could be a buying opportunity.
We will keep our eyes on it through the course of the week. Christina, thank you. Christina Partsinevelos. Let's get a news update this morning with Silvana Hanau. Hey, Silvana.
Hey, Carl. Good morning. French President Emmanuel Macron said President Trump told European leaders today he wanted to obtain a ceasefire in Ukraine during his Friday summit with Russia's Vladimir Putin. Macron also said the president indicated any territorial issues would have to be settled with Ukraine. Ukrainian President Volodymyr Zelensky traveled to Germany today for the virtual talks. He will not be in attendance Friday. The U.S. deployed 2 warships today to a disputed area of the South China Sea. So the move follows the collision of 2 Chinese ships earlier this week that were chasing a Philippine ship. The USS China Shadow, the USS Higgins, and USS Cincinnati for about 30 nautical miles, but there were no incidents. And Amazon is now offering same-day grocery deliveries of perishable items for some Prime customers. Now, that includes milk, meat, and cheese. And the company announced the move today as it ramps up competition against Walmart and Instacart's grocery delivery services. The new perk is available now in about 1,000 U.S. cities. Amazon says it plans to expand to 2,300 cities by the end of the year, Carl. Make it easier and easier.
Albertsons and Kroger both down about 4% this morning. Silvana, thanks. After the break, the legal landscape for big tech as AI startup Perplexity makes this bid for Chrome over at Google, and Elon Musk threatens to sue Apple. Plus, the next leg of growth for Quantum. The CEO of Rigetti's with us, with that stock up 1,700% in a year. He'll join us later this hour. Don't go away.
Mink.com.
Did want to keep a focus a bit on Paramount Skydance, obviously a new ticker, a new company, and man, that's quite a move there, isn't it? No real news to back it up. Have been checking some of the message boards and Reddit, not seeing too much traffic there, but in terms of traffic, a lot of it in the stock itself. You've got a very small float, remember. The Ellisons and Redbird have bought 70% of the company, so it's only about 300 million shares in the float, and it is trading quite actively. So you do have that going for you as well. It's kind of reminiscent of the old days, the Archegos moment. Remember Bill Wong? He's in jail now, of course, when he was buying up through swaps, and of course the prime brokerage firms behind it didn't even know how much he owned of both Viacom at the time, or Paramount, and then also Warner Brothers Discovery, which, by the way, is also up about 6%. So an odd
media
move
names
here.
can't go up unless they're being fraudulently hedge fund traded.
No, I don't think there's anything fraudulent here. I don't think they can, and they're not going to be using this as an opportunity to sell stock the way that Viacom was able to at the time. But it is notable, Sarah, because of the lack of any real news other than what we've gotten previously on
It's getting
Paramount.
a lot of analyst love, I will say, like a lot of initiations, buys. Guggenheim today said buy at 13. We've already surpassed that price target now. It's bullishness.
Yeah, it hit. That's a pretty quick price target hit there.
Meantime, AI startup Perplexity offering to buy Google's Chrome browser for $13.5 billion. Offer comes in as Google faces this regulatory scrutiny, as you know. Our next guest says Perplexity is another company trying to, quote, capitalize on Google's antitrust woes. Former FTC Commissioner Mozelle Thompson's here at Post 9 to discuss. Mozelle, it's good to have you back.
Good to be here.
We've been asking whether or not you think this bid is genuine, right? Or at least it comes from the right place.
Well, it's interesting. I think you have a lot of people out there trying to capitalize on the woes of others. And when you point your finger at someone, you have four more pointed back at you, it highlights the weaknesses in their own operation. They're a pretty new company, and the idea of making an offer that's almost twice as much of what their valuation is seems pretty unusual. And at the very least, it also shows that the weakness they have in getting data. They've only recently, in July, started their own search engine in order to gather more data. This company's had problems scraping data off the internet, and they have actually been sued by some pretty big companies. And what this shows is that in order to get more data, they see Chrome as a strategic asset. But in order to do that, they have to have some sort of exclusive access to Google's data.
Right. So how does it get received by the judge, do you think? Or at least how does it change the dynamics of the case, if at all?
Well, one of the challenges, and I've mentioned this before, is that things like divestiture is an unusual remedy. And in this case, where the market is changing and Google's dominance is being eroded by AI, there's a question of whether divestiture is the appropriate or most effective remedy. It could be really going after their ties, exclusive agreements with companies like Apple.
So you don't think that the judge is going to recommend a remedy to divest Chrome?
I think that I'm not sure that that is the best remedy right now. And I think most people out there, most experts think that it's unusual and may not be the appropriate one right now.
You know, speaking of Apple, I'm just curious to get your take as well on a separate story, which is Elon Musk attacking the App Store and saying it's unfairly favoring OpenAI and its ChatGPT. Is there a case to be made there by Musk?
Well, I think this is very similar to the Perplexity situation. that people are circling and trying to find out what their strategic opportunities are. But it also says more about the weakness of where Elon Musk is right now. And his XAI is not getting as much traction, even though they do have access to data through their Twitterverse. Former Twitterverse.
Yes, the X platform, of course, which they can solely use for their own training.
So they are trying to position themselves so they get more market visibility. This is one way to do it. But it's also important to remember that Apple's woes will take a long time to sort out in court. If they are sitting there trying to piggyback, if Musk is trying to piggyback on the antitrust action that the DOJ has against Apple, we're only at the earlier stages of that.
We are. Okay. Their idea, though, being that they're a gatekeeper who unfairly or is unfairly deciding who has access to a huge audience.
That's right. And don't forget, if you are pointing your finger at Apple, then people are also going to look at the relationship between XAI and X.
Meantime, what's your general sense about the direction of travel in regulation right now? Is it reaching a point where it's becoming too loose, and there'll be dangers that are concurrent with that?
I think it's unclear. One of the things that's happened is there's been a consolidation of power within the executive branch to make decisions in this area. Don't forget, at the FTC, they fired the 2 Democratic commissioners. And then the chairman has said that he's going to listen to what the president tells him. So does that mean, the question mark for a lot of people out there on the street, does that mean when they're involved in litigation and there's a possibility of settlement, are they going to go to the regulator in chief for an answer?
Is that not uncommon?
It's so unusual for that much power to be consolidated, especially in areas dealing with market regulation. And you talked about that earlier today in a range of issues dealing with is what is the government willing to intervene on? Is there industrial policy going on here?
Right. Yeah, we talked about state capitalism. Obviously, we're still digesting the news from earlier in the week in terms of the capture of 15% of the sales of both NVIDIA and AMD chips in China, which is unique.
Right. Absolutely. I mean, that I don't know many instances where the government has actually said, I want a percentage of your profit.
No, and the Treasury Secretary today said that might be a model in other areas too,
right,
beyond semis.
That's right.
So it could extend into regulatory policy as well.
Absolutely. It's not a big leap.
Moselle, good to see you. A lot to cover, and there's more news created every day. Moselle Dobbs.
Absolutely. It's a target-rich environment.
Moments away, deep dive on quantum computing. What's next for that industry? CEO of Rigetti Computing joins us as shares pull back just a bit from their blistering rally. Plus, key details on the new debut here at the New York Stock Exchange. Crypto exchange bullish. We'll get you ready for the first trade here when Squawk on the Street comes right back.
Best stocks.
Rigetti Computing reporting earnings after the bell yesterday, announcing the general availability of its Cepheus i36Q multi-chip quantum computer. You can see the stock's down a bit on results, up though almost 1,700% over the last 12 months. Joining us in a CNBC exclusive is Rigetti CEO Subodh Kulkarni. Subodh, good to have you. What advances have you most recently reported that are giving you the confidence to believe that the scale you need to start to really take on the hopes and dreams of all of those who focus on quantum computing will be here in as soon as 4 years?
David, thank you for having me on the show. We are excited to launch our latest system, which is a chiplet-based system. So it's 4 chiplets of 9 qubits each, so 36 qubits total, at an improved fidelity of 99.5%, what we call 2-qubit gate fidelity. That's the accuracy of quantum processing. Very fast gate speeds, about 60 to 70 nanosecond gate speed. And that's available for general public now on the cloud environment. This follows our previous announcement of a single chip, 84-qubit system that we launched end of last year. That's at 99.0% 2-qubit gate fidelity. So not only did we increase the fidelity with this new latest system, but we also deployed chiplet architecture. And the reason chiplet architecture is so important is that's truly the only way you can scale up quantum computing to have thousands, if not tens of thousands of qubits. And that's what we really want. You mentioned 4 years. We have said that we need to get to quantum advantage, which is when quantum computing can demonstrate superiority over classical computing for most practical applications. We need roughly 4 things. One is qubit count has to be at least 1,000 qubits. The fidelity, the 2-qubit gate fidelity has to be at least 99.9% or better. The gates have to be faster than 50 nanoseconds. And last but not least, it has to have real-time error correction. With those 4 things, we believe we will get to quantum advantage. That's when quantum computing becomes really exciting.
So what technical hurdles remain then? What will be the most challenging? And obviously, you're competing here against the likes of companies with a lot more resources, whether it be Alphabet or IBM. So, how do you see the technical challenges evolving for you and overcoming them?
Yeah, there are significant challenges when you are doing complex technologies like quantum computing. I don't want to undermine the challenges. A key one that we have overcome is with the launch of chiplet architecture and demonstrating high fidelity with chiplets. There is a viable path to scaling up quantum computers to over 1,000 qubits now. So that's a key milestone that we demonstrated this month. But there are other challenges. Getting fidelity from the current 99.5% to 99.9% is probably the biggest challenge we have ahead of us. And that's not a trivial challenge, but I view it as more of an engineering challenge. Just to give you a reference, the CMOS industry that we all use CMOS technology right now, we did similar things about 30 years ago when CMOS technology was at 99 and 99.5%. Today, CMOS technology is 4 nines or 6 nines, depending on the application. So we, leveraging the semiconductor industry know-how, we know how to improve fidelity, but that is the biggest challenge we have ahead of us. We will have to improve our gate speeds, but frankly, that's not as daunting a challenge as the fidelity. And obviously, error correction, we are using it with classical computers right now. We need to do that with quantum as well.
Can we just step back? We're still trying to wrap our arms around what an AI future is going to look like and how it's going to transform our lives. What does a quantum future look like? How do you envision that changing business and everyday lives?
The stakes involved with quantum computing are huge. You will be able to solve problems that are unsolvable right now with classical computing, and at the same time consuming a lot less energy than what classical computers are consuming right now. I'm sure you're fully aware of the energy requirements for the latest GPU systems, and they are daunting, to say the least. Quantum computers not only give you significantly better computing power, we are talking 1 million or 1 billion times better computing power, but also at a very small fraction of the energy consumption that classical computing consumes right now. So there's a double win with quantum computing, both on the computing side as well as on the energy side. There are many problems that cannot be dealt with classical computing right now, like weather forecasting. Certainly AI is a big one that everyone's looking at right now, and the task of getting from Gen AI to AGI, could quantum computing help that bridge that gap possibly? But there are many other problems too: drug discovery, material synthesis, the list goes on. Encryption is a big one that everyone's fully aware of, that what quantum computing can do and the stakes involved with it. So there are many applications, many studies have been done about quantum computing. The business is expected to be hundreds of billions of dollars a decade or two from now. But we are still very much in the R&D stage. We need to perfect the technology before all those numbers become meaningful. So our view is that the next 3 to 4 years, we are still very much in R&D. Technology milestones are the most important things, and beyond that is where then the business becomes exciting from a financial standpoint.
You kind of buried the word encryption there, but that certainly is one of the existential worries that those involved in crypto have. How do you generally answer questions about crypto's vulnerability eventually to quantum breaking that encryption?
Certainly, quantum computers have shown for a while now on paper that they can easily break the current encryption that we all use with classical computers. And that's certainly a big cause for concern, and that's where national security gets involved. All of us are aware that once quantum computers become real, you can hack into any encryption code that we are using today. At the same time, there's a whole field evolving called post-quantum cryptography right now, where people are trying to see whether we can use quantum computers to generate encryption codes so they cannot be broken by quantum computers. So it's a race going on right now as to which one comes first. Stakes are indeed very high. National security is at stake. So all of us are fully aware of what quantum computers can do. And encryption is one of the biggest reasons why many national governments are taking significant interest in quantum computing. That's why you see national quantum missions from various different countries and significant funding by the US government along with other governments for quantum computing right now.
Real quickly, Subodh, finally, do you have enough cash to get you where you need to be, or do you have to keep raising money?
Fortunately, we have managed to raise enough money. We are sitting at the end of last quarter, we are sitting on about $572 million cash and no debt. Our burn rate right now is roughly in the $60 million range. So we have plenty of cash to get quantum computers commercial and get ourselves to a profitable stage. So we feel very good about that.
Subodh, thank you. Complicated topic. We're going to try and keep an eye on it as best we can. Appreciate it. Thank you.
Thank you for your time.
Meantime, Peter Thiel, backed crypto exchange bullish, set to debut here at the NYSE today. We'll tell you what you need to know ahead of that first trade, as we are getting indications. Later on, CEO of eToro breaking down their first quarterly results since going public. We're back in a moment.
and make it count.
You seem to believe that stocks and bonds at some point may trade as tokens.
I do, but I'm pragmatic, David, and I'm not saying it's going to happen overnight. These things happen slowly, but suddenly. But that is what the market is telling us. I've met with 80 investors. I've met with CEOs of the major TradFi exchanges, and everyone is talking about it now and saying, hey, what's the path? Because it's feeling more real now.
That was Tom Farley, the CEO of the crypto company Bullish. He's a former president of the New York Stock Exchange. That company, Bullish, going public right here today. It priced at $37 a share, above the original range of 32 to 33. And I'm looking at indications that indicate 55 to 60 as well. Let's get to Tanay McKeel, who's got some sense here in terms of the importance of this company, its role in the market, and just sort of trying to understand what it is they're trying to accomplish.
Yeah, you can see from those indications the way the appetite for a company like this has really grown since last week. Bullish is a crypto exchange. That's how I hear it talked about a lot, but they also are the parent of CoinDesk. They, are in the business of data and indexing and events, of course. And I think it's really interesting at this point in time. Of course, we're seeing yet another crypto company try to take advantage of the crypto-friendly stance from the Trump administration by going public. You saw eToro recently, Circle, of course, the uplisting of Galaxy Digital. But I think also to the point that you guys were making in that clip, the idea of tokenization is just becoming a lot more real. We've heard Larry Fink from BlackRock talk about that as an important step to the technological revolution of finance, the tokenization of everything. We've seen BlackRock, start to put things like money market funds on a blockchain, on the Ethereum blockchain specifically. And I've been going to these conferences for years and years as a crypto reporter, hearing all of these institutions talk about the future of tokenization, but it really is starting to feel more real. And so Bullish is a little bit different from exchanges like Binance and Coinbase in that it is more institutionally focused, and it does kind of blend, decentralized finance protocols with the security of a centralized
company. They're spending, I think, $1 billion on the stable coins that they're going to be buying. They're using Solana as the rails, not Ethereum. I don't know. Are we going to see more? Is there just even more coming?
I think so. And I go back to BlackRock, which you remember really took the lead when it came to Bitcoin ETFs. For 10 years, the crypto industry said it was so important to have a Bitcoin ETF. BlackRock jumps in and we get it months later. And so I think you're seeing the same thing with tokenization. It's just starting to become a much more productive conversation versus, yes, that makes sense and sounds important, but this is finance and it's highly regulated and these things do not happen overnight. I do think Tom Farley said that these things don't happen overnight, but I do think it's becoming a much more productive conversation, and you are going to start to see some real integration, and especially after, the SEC recently announced Project Crypto to be able to reassess the rules and regulations to be able to bring the traditional finance world on chain, so to speak.
Yeah, we did talk to Farley a bit about, certainly BlackRock's U-turn is essentially what it was, but also the things that Jamie Dimon had said about Bitcoin in the past, Charlie Munger had said about, the institutions had sort of negative qualitative things to say, and yet they're all participating now.
Yeah, sort of the future, however you think of it, is moving in this way, and it kind of feels like the institutions are finally waking up to the fact that they're having to move forward.
My question is it getting crowded out there? Bullish, you mentioned eToro. We'll talk to the CEO next hour, Robinhood. I guess they cater more toward retail versus institutional.
And there are institutional services there, of course. Coinbase provides the custody for so many of the ETFs, but they are, in terms of the exchange and trading business, where you're trading actual cryptocurrencies, a little bit more focused on the retail investor.
All right, Tanaya, thank you.
After the break this morning, a closer look at Kava today, getting slammed as the company reports some disappointing comps, now down 50% from the highs. More on the fall from grace from one of Wall Street's former darlings when Money Movers begins after this.
Learn more.
I love you, Mom and Dad. Oh my gosh, am I gonna... Dear Mom and Dad, I just want to say thank you for everything you've done to help me reach my dreams. From Woodley Field to Kaufman Stadium. There's absolutely no way I could have done all this by myself. Both of you constantly took off of work and spent every dime you made just to put a smile on my face. My smile and appreciation for both of you has never stopped, and it never will. I will always remember traveling around Florida for baseball, trying to cheaply eat and save money, but I never could because you both always wanted me to have the best stuff to help me pursue my dreams. The money you both spent on traveling, gear, hotel, food, and all of those Gatorades I drank is much more than I could ever give you. But there was something I want to give to you. I am paying off the loan from the bank. Also, I paid off all your debt as well. What? Now, instead of trying to save money every weekend to replace the savings account you drained on traveling to play baseball, you can spend it on yourselves. Because you deserve the very best, I want you both to know how much I appreciate you and how none of this would be possible without you. Your giving hearts helped to shape my tiny dream into a reality. I love you both more than you could ever imagine and will never forget what you both have done. Now let's go celebrate. Merry Christmas. Love always, Brady.
CustomInc.com.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the record run for stocks and whether this truly is one of the best investing environments we've seen in some time. We'll ask the investment committee. Joining me for the hour today, Josh Brown, Joe Terranova, Carrie Firestone, Surat Sethi. We'll take you to the markets here. We are extending those record highs as Carl and Sarah were just talking about. Volatility index, lowest level since December of 24. And just when you thought there was a lot of uncertainty and the bull market might be in some form of jeopardy, BlackRock's Rick Reeder came on Closing Bell yesterday and told me the overall investing environment is the best ever. Listen.
But there's a couple of things at play that are pretty extraordinary. First of all, you take the equity side. First of all, technicals and equities are crazy. I know we've talked about it before. Amount of cash on the sideline, the amount of buybacks relative to the IPO calendar, i.e. the demand versus supply, is pretty extraordinary. And these companies, we've talked about on the show, the multiple is not that attractive. These companies are throwing off the earnings growth. Then you take the other side of it is you've got an income and fixed income. You're getting yield levels. Listen, I think the Fed can cut rates, but until then, you got yield levels. You can create portfolio 6.5%, 7% yield. That's pretty good.
BlackRock's Rick Reeder, some near-term volatility, obviously, notwithstanding. What do you make of what Rick Reeder said? I don't remember him being as just fully positive about the big picture of this market like that. Is he right?
It's interesting listening to him because I'm thinking about all the people that told you over the last 2 years the right place to be was sitting in cash and getting 4 3/4. Yes, he's right. It's a healthy marketplace. There's more opportunity when you look at the capital markets. When you think about opportunities in taxable fixed income, when you look at equities and you say to yourself, okay, I just don't have to invest in the U.S. like I needed to over the last 8 to 10 years. I could actually look at large cap financials. I could look at large cap industrials. I could go outside of just owning the concentrated Mag 7, which was the story of 23 and 24. So he's absolutely correct. And here we are today, a day in which momentum, the leading factor for 2025, it's having a difficult day. The NASDAQ is down, which has been one of the leading indices. But yet, what do we see? We see the Russell stepping forward. We see areas of the market like home builders and biotech also stepping forward. Areas of the market the last several months that have sat on the sidelines.
Josh, the fundamentals are good. The technicals are good. There's cash on the sideline. You've got a lot of buybacks. The capital markets activity, as we know, IPOs have certainly returned in a big way. And if that's not enough for you, you take a look at what exists right now, according to Reeder, in fixed income, and you have a pretty solid investing environment. You want to take a shot at that?
Yeah, let me do like a little baby encomium for Rick Reeder. It's so refreshing to hear a fixed income manager speak positively about the opportunity in equities. I think what makes him elite and one of the best market commentators over the last few years is the versatility of thought that he has. And looking beyond, what the rate picture is, and trying to understand, well, why are people making all this money in NASDAQ stocks in large cap U.S. and where's the puck going to next? So I think that's what makes him stand out and why I always pay attention to his comments. And I thought you did a great interview with him yesterday. I want to build on one of the key points that I think we want to make today: the broadening out. Biotechs are up today. When was the last time you've been able to say that? Not just up, but the XBI is up 2.7%. And some of the leading names in the space are up closer to 4 and 5%. The XBI is putting together a 2-day run of 5%. It's early. I wouldn't tell you that anyone is cheering, but this is like one of the most left behind areas of the market. And if you want the small cap thing to be sustainable, it's got to transcend value stocks. It's got to get into areas, speculative areas like small cap biotech. And that's what's happening. Another left behind area of the market, home builders, up another 2.5% today. Home builders are up 6.5% over the last 2 days. And again, it's early. Nobody's breaking out the champagne. But this is a really key area of the market that you want to see finally get some positive attention. Look at small caps broadly. From the Liberation Day low, small caps are now slightly outperforming the S&P 500. From April 8th through today, the Russell 2000 is up 29.7% versus the S&P up 29.5%. The All Country World Index is up about 27% over that same period. So what you're not going to hear right now are the naysayers who would tell you, it's all Broadcom and NVIDIA, it's all AI CapEx. Yes, that is the most important growth driver for the big picture, but you are seeing traction in home builders, in biotechs, in all country world. All these developed nations are rallying. And I think that's really important if you're going to stay bullish from today forward. So when Rick said this is one of the best environments for investing he could remember, I think I know what he means. He's not saying starting valuations for the S&P are great. He's just saying, like, look at all the different areas that are working and all the opportunities that are being created. And I think you'd have to agree with that so long as rates stay on this downward trajectory, which today they're following through to the downside, and we didn't have another inflation report. So it's a really key point that he makes, and I agree with it.
Carrie, BTIG's Jonathan Krinsky is looking at small caps, asking the question, is it different this time? They have had a surge, and in an incredible one. In just 2+ days, the Russell 2000 is up 4%. That gives you an idea of what has happened this week. In terms of the reader perspective, Wolf today speaks about the fundamentals, and they say the outlook looks strong, and they point to earnings. On the technicals, they weigh in there as well. They say the best internals in 2.5 months for the Russell 3000. So the 2000 is solely representative of small caps. The 3000 gives you a much broader view of where we are. It's, in many ways, that speaks to exactly the kind of conversation that we're having on our desk today.
Yeah, well, if we look at the market beyond the Mag 7 and the other big tech names, which, we're talking about here, they've lagged. It's time for them to move. I think they've been waiting for a rate cut or the assumption that there's going to be a rate cut, and I think we're beginning to see that. The jobs number, unless miraculously it comes out really strong, I think that would cement the idea that we're going to have a rate cut. And Josh was talking about biotechs, particularly the small ones who don't make any money. They need money from markets, and the IPO market has been strong. Presumably the secondary market will be strong, and so yes, I think that can continue. If you look at the Mag 7 multiple, it's about 30 times forward earnings. The rest of the market is 20-ish times forward earnings, and small caps got to be lower than that, probably 15, 16 times. So this all makes sense. I would two words of caution, if I could. One is that the IPO market being very strong is good in the near term, definitely good in the near term, because people have been waiting, and we're waiting for opportunities to invest other than in NVIDIA and Broadcom and Meta, et cetera.
You'll get another one today, by the way.
Correct.
And the bell may ring at any time during this program as bullish awaits a trade that is going to look pretty bullish, we think, off the open. Priced at 37, the range was 32, 33. And we'll follow it. So if you hear the big ding of the bell behind us and a bunch of cheering, that's what that's about. But, the point you're making, what's the caution part of that story?
What I was going to say is that the strongest years for IPOs, if you go back in history, was 1999, 2007, 2021. And we know what happened in the years following.
Yes,
so,
but
we're nowhere near that. But people need to have that in mind, I believe.
This is going to be, it has the potential to be the strongest year for IPOs in a couple of years. We're not talking about in the annals of historic kind of years. So I'm not sure I go with that. Sarat, the environment, fundamentally, technically, what do you think? How do we look?
Definitely favorable. I mean, if you're seeing this broadening, you're seeing the anticipation of rate cuts, and to your point of, hey, why are the Russell stocks doing well? Well, so many of them are financial services stocks. So many of them need capital markets, need interest rates to be lower. So if that's coming, and it's coming for the right reason, Scott, which is, hey, if maybe inflation's not where it is and it's coming down, and if employment's going to be coming down, we need some more fuel in this economy. That's going to really help the stock market, especially the broadening part of it.
I want to give two stocks real quick related to home builders and the rally that we're seeing. Number one, Williams-Sonoma. That's a name that we added to the ETF in the most recent rebalance in July. And how about this name? Installed Building Products. Take a look at this. This is a small cap company, $7 billion market cap. What do? Residential insulation. And if we are actually going to see an uptick in improvements to homes and new homes being built, this company will benefit from it significantly, and it's had a heck of a run since last Friday's jobs report.
Hey, given Rick Reeder's view and how he expressed it yesterday, and I even at one point referenced as he was articulating it, well, if anybody at the White House is watching, they're standing up and cheering like, that's the story we've been saying. Well,
nominate that guy.
Exactly. I don't know if they were, but now he's made the list, apparently, of possible next Fed chair. Steve Leisman reporting, of course, today that we're up to 11 now, and Reeder's on the list. Zervos, who's a frequent guest on this network, obviously, and David Zervos and Larry Lindsay have made it too. And speaking of the Fed, this Treasury Secretary made some comments today that rate cuts could start with 50. He thinks 50 may be warranted in September. Could have already cut in June and July, he said, if the data was more reliable. In other words, if you had a more believable read on jobs that maybe they've already would have cut, and they should be, interest rates should be 150 to 175 basis points lower. B of A says we're not buying any of that. The Fed's going to stay on hold until the second half of 2026, which is interesting. And you'll get Goolsbee and Bostic today as more Fed speakers hit the tape in the 1 o'clock hour. But I thought, Kerry, that was pretty interesting. That Reeder was here yesterday. He made those comments, and then lo and behold, his name is on the list. I'm not saying there's a definite cause and effect, but
I think it happens, Scott.
Your show is watched worldwide.
Seems a little fishy.
It was really impressive.
Seems a little fishy. All right. In terms
I would
of positioning,
like to cut rates by 500 basis points. Am I on the list?
Yeah. Well, you might be.
Yes.
You might be.
I want to say one thing. Look at the rate sensitive stocks. Look at the rate sensitive stocks, even away from real estate directly, that are like, let's say, in technology or in media. But my bet is Rocket. So Rocket, obviously, Rocket Companies owns Rocket Mortgage. Look at what this stock has done over the last month, and they're making some really big bets and some big acquisitions in the mortgage servicing market and in the realtor lead gen market. They bought Redfin. That acquisition closed. They have a transaction with Mr. Cooper. Hopefully that one closes as well. They're doubling down on a resurgence in real estate. And look at what that stock has done. Now you've got some big hedge funds in there. You've got Value Capital, which is an activist. I'll give you another one. Look at the difference. Look at the way SoFi has traded since reporting earnings. They were good. They weren't this good. That's a bet on higher rates. And then I'm going to give you the contra. The entire gain in Circle was wiped out after they reported. Circle is a bet on high rates, higher for longer. Think about what their revenue is. It's the interest from money market fund, basically. Lower rates means lower revenue for Circle. That stock had a huge gain post-reporting, puked up the entire thing. And I think what you're seeing the market do is extrapolate this idea of lower rates, not just in home builders, but all over the economy. All these stocks that we're trading that are not real estate companies, where there's a rate sensitive situation. If that has legs, we're probably only in the first or second inning. The Fed Watch tool is now saying 100% chance of a 50 basis point cut. A month ago, there was only a 57% chance of a 25 basis point rate cut. So look how fast the market has changed its expectations.
And
my hat is still in the ring. I'll cut him to zero.
All right. Well, you could be added to the list. Leisman's on the case. He'll follow, of course, as the pool is growing ever larger. Circle, you mentioned, SoFi, probably a fair amount of retail participation in those types of names. And an interesting note today out from Goldman Sachs on that very topic, where they talk about how to play some of these retail-heavy or meme-like names at times. Christina Partsinevelos looking at that for us today. What'd you find?
That the animal spirits are back, Scott. We're seeing retail investors, they're spreading beyond just the meme stocks into broader large caps. So prompting Goldman Sachs, like you mentioned, to warn there's a lot of upside in stocks with high retail participation. And their data shows massive retail inflows just over the last month in Palantir, AMD, KeyCorp, Electronic Arts, UPS, Warner Brothers, among others. The firm is actually recommending clients buy call options on these names you're seeing on your screen, betting these stocks will rise by purchasing the right to buy them at today's price. The risk appetite, though, really extends to short squeezes, too. Fresh CNBC data from our team shows short interest across the Russell 1000 jumped to 4.6% in July from 3.8% just at year end. Take Kohl's, for example. It's up 6% today, and roughly a third of its shares remain sold short despite just this continuous rally. The department store chain is actually part of what traders call the dork trade, Scott. So Krispy Kreme's parent, Open Door, Rocket Companies that Josh just talked about, and Kohl's all drawing heavy retail interest. But for now, Goldman's message is clear. If you're betting on market momentum, follow the retail money.
That's right. Christina, thank you for that. That's Christina Partsenevelos. They say buy calls on names like Palantir and Cummins and Electronic Arts and TransDigm. We don't need to talk about Palantir so specifically because we have on so many occasions. But what do you think about Cummins, Electronic Arts, which you have in the T? You don't have Centene anymore.
Cummins is a reasonable valuation, upper teens, participating clearly in providing power in data centers. So I think there's a longer-term thematic AI story there. Electronic Arts, look, they're having an uptick in engagement. You have Madden 26 coming out for both football and hockey. They have the FC soccer franchise. So that's more about, I think, in the coming quarters, can they sustain that engagement? I'm not that excited about that one, but I think, look,
new record high.
Yeah,
I mean, it is a new record high.
It is a new
today.
record high. I will acknowledge that. And look, we own it. We're happy about it, but I also understand the fundamental driver behind it. So I'm throwing a degree of caution there. But I think overall, look, it's about the momentum factor, and the momentum factor is the leading factor in 2025. Now, today, it is down 75 bips. That's something to watch, because if you tell me that the momentum factor is going to roll over in the next 30 days significantly and have a 5, 6, 7% correction, I wonder if at that point the market will struggle to continue to make those gains.
I feel like it would only be that way if there was a sizable broadening from here forward, which is why maybe you would have that happen. TransDigm is you.
This is one of our core holdings. I mean, stock had earnings last week when it was down 10%. But if you look at kind of what TransDigm does, which is airline aftermarket parts, they're levered 4.5 times. If rates are coming down, they just announced a 5% cashback dividend. And the market for airline aftermarkets is huge. So I think this was a misunderstood stock that got badly hit on earnings. And I can see why retail investors are coming after it, because not only are you going to get the growth, but you'll get some dividend out as well.
Joe was just talking about momentum having returned. It certainly feels like it's returned to Apple. Stock's up more than 10% in 1 month. It is green yet again today. It's above $232 a share. You've been a buyer of it personally, recently, on several occasions, including again today.
I will, yes, again today. Let me walk through all of it. I know Jim Cramer right now, if he's listening, is not going to be happy, because yes, I am trading Apple, and I'm taking advantage of what I believe to be a significant rebuilding in portfolio manager positioning, in particular for growth managers.
He may think you're smart, like using the fact that there's some renewed momentum and life behind the name. So he can come down here, by the way, and sit on the set. We have an empty space today, so we'll find out if he's angry or happy with you.
Okay.
Maybe.
Last Wednesday, the big bite was at 206 in Apple. I would say that somewhere near the upper 60% range of my entire trading Apple position right now is at that level. Thursday, 217, Friday, 221, Monday, 226, today, 232. We're getting close to my target. I think the target here is around 240. I think at that point, a lot of the momentum for portfolio managers building their position, that will begin to fade. I'm trading this. You have to put a stop in. Below 222, I would neutralize some of the more recent buys, but I am going to maintain a longer-term position here in Apple. That is for sure, because I do think there's been a shift clearly in the relationship with Tim Cook, Apple, and the president.
I'll tell you what, a firm called Alpine Macro today says Mag 7 stocks are quote-unquote mania candidates because they've had a straight line run-up starting on April 9th, for the most part. Some of the reactions immediately after earnings weren't that fantastic, but they seem to have picked up because NASDAQ in its own right has been hitting new highs, like Meta. Your Meta, Carrie, hit a record high again today. They obviously had the the Threads number come out this week, which was really strong.
Huge.
So what about this stock here now?
Yeah, I think it can go higher. Meta, Google, Apple, and NVIDIA all basically at all-time highs. And I think when it comes to the fear that people have had about antitrust, anti-competitive behavior, taking some of these companies apart, we just saw what happens if you make a deal with the White House. I mean, there are ways to get around your problems. And Meta would be a beneficiary of that. All of them. Apple, I think the surge in Apple has to do with the fact that they have been under attack by administrations over the last few years.
Oh, yeah.
That's gone away.
No, you
with
show
Meta,
up, you give a golden gift, and you your stock takes off.
You know, let's make a deal.
Wash, rinse, repeat.
The positioning helped.
NVIDIA, by the way, speaking of this topic, Target and the deal, obviously, that they've made to be able to sell their chips into China. Price target 225 from 180. It's overweight still at Piper Sandler. Everybody owns that stock. Semiconductors, worth watching today. Broadcom hit a record today. The Semis ETF hit a record today. Taiwan Semi hit your buy list today.
Yeah, exactly. Well, we bought it when I was on vacation, but first time I'm back. And they manufacture 50% of the world's chips and most of the high-powered and more complex chips. All of the AI chips are pretty much coming from Taiwan Semi. And we believe that there's a long runway. We've got 10 years of growth that we think is exceptional to earnings, and it's been discounted as a multiple because of the threat, possible threat because of China's invasion, which we think is over discounting. So we made the purchase. We wish we owned it earlier, but we bought it now.
Okay, so semis again, ETF hitting another record today, and then there's software. Okay, because that's telling a different story. The IGV is on track to snap a 4-month win streak. If you look at the amount that some stocks in that universe are off of their 52-week highs, 2/3 of the IGV is down 20% or more from those levels. Names like Samsara down 47%. Adobe, which we have hit relentlessly this week, is down 41%. Salesforce is down 36%. What's going on with Salesforce?
So, I mean, we still like it. The bear case on
what do you like about it?
Well, Salesforce is embedded in almost every organization, and they're going to be able to use AI to get efficiencies out there for their customers. The argument is that AI is going to allow customers not to use them. We think that the amount of information that Salesforce has on their customers and the ability to help them grow is going to be much better than the other side of it, which is customers don't need them anymore.
What do you think you know something that something that the market does not?
Well, what I know is that Salesforce has brought down their growth rate over the last couple of years, and the market is saying that's going to accelerate faster. We think that's not the case. We think it's an investment period for Salesforce, and they're going to grow through that.
Josh, what were you going to say?
It's the employment rate that's affecting Salesforce. This is the ultimate pro-cyclical software company. When there's lots of hiring and expansion, that's when Salesforce has the most opportunity to rack up new wins with both existing customers and with new customers, new companies. And when that goes into reverse, it's not that it's catastrophic, because to Sarat's point, they're extraordinarily embedded, not just with the Fortune 500, but with small and mid-sized businesses all over the world. The problem is the growth rate, the expected growth comes down, and you're paying a high multiple for this name, not sky high, but not cheap. So look at the last 3 unemployment reports, look at the trends, look at initial claims, look at continuing claims. Not the best environment for a company like Salesforce that is effectively a call option on the growth in employment in the country.
All right. Well, my day was just made because Jim Cramer heeded the call.
The judge can't be bought.
That's what you said earlier. I knew you were talking about me. All right. So
I just heard, by the way, Josh is so great. He's got that program that's been advertised, which is so good. And I know the AI ate the software, Ben writes. It's a really interesting call. And it's a problematic call because my Chappell has a small position in Salesforce. I know that the perception is maybe more important than reality right here. So just put that out.
So I asked you to come down here because, Joe has been buying Apple, again, personally, for the first time in a while. And they've been repeated buys. You've always made the case, own it, don't trade it.
Right.
But, we've had a different environment around the stock over the last year or so. More questions than, I think, answers.
Right.
What do you make of the move that he's done, and how do you think about it?
Well, first of all, I'm telling
you why I'm doing
obviously.
it? Do you know why I'm doing it?
No.
Because think about where everyone was last week positioned. Think about all the growth managers that said Apple,
And yet it had an unbelievable week. It was the best in show.
Right. So what do those managers have to do? They have to buy. Think about all the momentum funds.
How about there was up 10 on no volume, and then you normally would give it up, and then it came up 10 on huge volume on Friday. Let me tell you why I think you're right, okay? First, the skepticism is pretty great because we're going to get a ruling from Judge Mehta. Not Meta AI, as Faber told me, Judge Mehta, which may say that, look, Google can't pay him $20 billion. We all know that, but perhaps they can make more money. Maybe they can have others who want that flow. But the thing that, that I like the most about Apple the whole time, I mean, literally the whole time, is that it's still the best product. I am with Tim Cook. It is still the best product. And until I start seeing people with Samsung, which I still think, by the way, could get a tariff in the end that's high if the president's watching, and he might just say, hey, I heard that, let's put a tariff on. But I do think that it's, as long as it's the highest quality, I got to stay with it. And I know that seems soporific that you could just say, you know what, they have the best product. But I mean, I was out without my watch for a couple of days. Of course, Apple saw it immediately and said, what is the matter? I had a rash. Well, we've solved that. But I mean, I'm part of the ecosystem. If they fix Siri, even if by Cerence, just by Cerence AI, if they fix Siri and I can have a conversation with Siri rather than this miserable one-way thing I've got going, and, I don't know. I mean, their devices are perfect.
They are, but let me ask you this. Do their devices, if you make an analogy to a beautiful car, do they still have the best engine? Do they still have the best engine, AI, to compete with others who have seemingly driven past them on the highway? And
No, not yet, but
shoulder.
they could write a check, obviously, for this Perplexity, enough for it with Perplexity to make the bid for the Google crime. Thank you. Very, very smart. The crime is very smart. But they can develop it. They have the cash if they want to. They could buy Cerence. I had one last night, Cerence AI. Khazanich runs it. They have the best sound. It's in your car. Your car is really good two-way. I think my car tells me what I'm doing, and I tell my car what to do. But I just think that you can't rule them out. It did get cheap. But I just think that Tim negotiated with the president in a brilliant way. $500 billion? No. Okay, $600 billion. I don't even know if you could spend $50 billion over the course of 4 years.
How much of that move that we've seen recently do you think is a direct result of if a détente was needed?
Okay, I'm going to give you what I think it was. And I know I wrote this to my investors in my investing club this weekend. I said, listen, guys, I know no one will believe this, but this was the biggest short squeeze in history. Biggest short squeeze in history. I think that there were people who were size short sellers who realized, oh my God, we didn't get the ruling from Judge Mehta. We just got to deal with the president. I got to cover. There were millions of shares sold short. It was the safest short in the world. There can't be a takeover. It's liquid. I want to put it. There were guys putting it out and putting it out and putting it out. And let me tell you something. They're like 12 furlongs behind.
Hey, I'm not saying that they were shorting it because it's a different conversation.
But we know who they were. They were who we said they were.
I know, but when the biggest of all, when the biggest and greatest of all time has been, consistently selling down the position in Apple. I mean, it makes you sit back and ask some questions about what is really happening for a stock that was universally loved by everybody, and now AI's changed the conversation.
I just think that AI is a check. Look at what happened with Amazon. They decided to go train him. They didn't spend the money. They didn't. And the growth was 17.5%. Azure spent the money. Google Cloud spent the money. I think that Andy Jassy, who's not watching the show, by the way, who's actually working, trying to get us food same day, which I love, would say, you know what? Let's get everybody together. Maybe we are being penny wise and pound foolish, not writing the check to Jensen.
Let me ask you one more
must
question.
write the check to Jensen. Don't you have to write the check to Jensen?
Absolutely.
How much did I love her in college? It's ridiculous. It's ridiculous. Me and Bomber, all we were interested in is one person, it's her.
I'm glad you made the.
It's true, and you know that leather jacket, we loved it. It was
I'm glad
incredible.
you made the segue.
I love your husband too. I was a little off. I'm off course there. I'm off course.
Thanks, the whole family. Lastly, before I let you run, because you got to go, and you made a good segue from Carrie, because she just bought. Speaking of software and how some are suggesting that Gen AI is going to kill software, or it already is. Carrie bought Oracle and sold Autodesk. What do you think about
I don't
those
mind
moves?
the Autodesk. So I am worried. Okay, you tell me. Is Oracle eventually going to be overstretched cash-wise? And have to just, they have a good balance sheet, but oh my God, what they're doing.
I think the earnings over the next 4 years are going to grow over 20%.
Then
I
we're
really
fine.
think the market doesn't appreciate
Then
how
we're
well they're going to
fine.
grow.
I'm a double Ellison guy, right?
Yeah.
That, and then what is with the meme? It's ridiculous.
Oh,
It's the
Paramount
float.
today. It's up 20% or something.
Yeah,
like
that was not favored.
Yeah,
it was not favored. I love you guys. Fantastic show.
Remind us and our viewers what you have at 6 tonight.
Well, we've got. Well, I'd actually like to just mention tomorrow we got our 12 o'clock meeting, our club meeting, which is going to be. That's what's really, really important to me. I know that what I think will happen is I have to go over some of the very things you guys are talking about, particularly defense of Apple, because I do think it is the most difficult one to defend in terms of price to earnings multiple and in terms of AI.
All right, there's your segment.
The
In
China
defense of
business
Apple.
turn is not priced in yet.
That's true.
Thank you.
Love the show.
Love you coming down.
All right, thank you.
See, it's always there for you.
Look, I mean, come on, it was 1974. I mean, most people weren't even alive then. Enough already.
All right, you're going to wait a second. We're going to talk about Kava's big drop coming up. Brinker's a story today in and of itself.
And I have Brinker tonight.
All right, great.
All right.
Awesome. Good timing for that. We're back after this.
To learn more.
right, welcome back. Let's talk about some restaurant stocks today because many are ugly. And that's following Cava, 52-week low. Their same-store sales growth was a disappointment, to say the least. There's that stock. But let's show you Brinker, EAT. Man, Chili's is killing it. Their comps are up 21.3%. The guidance was well ahead of estimates. Josh, Shake Shack was down, I feel like, on the Cava print, and so many of these other restaurant stocks recently, the commentary's been terrible, and so have the numbers.
Let me explain it in a very succinct manner. This is as simple as people staying home as opposed to spending 5 days a week in the downtown area of one of the 20 largest cities. Cava and Sweet Green, which already blew up, are highly reliant on people dressed like me, sometimes with a vest, depending on the weather, going to work,
depending on the
coming
job,
down the elevator, pre-ordering a salad or a bowl of whatever on an app for $17.50, and then bringing it back up to their desk to work. And with less people doing that than ever, and that culture never really recovering and coming all the way back, tough to be those companies. Chili's killing it because Chili's is in the suburbs. Not that I know specifically where it is, but it is not reliant on the urban professional who is 28 years old looking to order something for $17 and eat it in 15 minutes. Chili's is the opposite. The restaurants are where people live. You don't really need to know anything more than what I just laid out. That's what's going on.
Okay.
I don't see it changing.
DoorDash is an interesting one today. They, along with McDonald's, expand their partnership. DoorDash is off today, and you think you know why?
Well, it's off 5% today because this Amazon story about same-day delivery on grocery, it is a big deal. And it's affecting not just Dash. If you pull up a chart of Instacart, CART, you'll see that's down about 10%. Uber's down a little bit here today. And it's even affecting Walmart. And Walmart looked like it was breaking out ahead of earnings towards that February high at 105. So Dash has been in the strategy for quite some time right now. They had excellent earnings. Those earnings exhibited that they are capturing market share significantly. I'll take the other side of this down 5%. I still think Dash has further to go here on the upside, Walmart as well.
All right.
But overall, the Amazon story, that's a powerful force.
We'll get the news from Silvana now. Hi, Silvana.
Scott, good afternoon to you. All right. Israel Prime Minister Benjamin Netanyahu said he'll, quote, allow Palestinians to leave Gaza during an upcoming ground operation. And this comes as the Israeli-backed Gaza Humanitarian Foundation disputed reports today from witnesses and health officials of Israeli gunfire killing at least 25 people who were looking for aid. Officials are warning residents in Juneau, Alaska to prepare for evacuation as the state's capital braces for record flooding. The city said floodwaters from rain and melted snow have already escaped from a basin dammed by the Mendenhall Glacier. Now, forecasters say flooding is expected to peak today. And after spending months overhauling the D.C. institution, President Trump today unveiled the list of this year's honorees for the Kennedy Center. They are Sylvester Stallone, country music star George Strait, singer and actor Michael Crawford, along with disco pioneer Gloria Gaynor and the rock band Kiss. President Trump also announced he will host the December event himself. Halftime Report is back right after this.
Plus.
Josh Brown's best stocks in the market has some new names that he has focused on. They are?
So we're going to talk chip equipment. Most people are familiar with Applied Materials, AMAT, not on the list right now, but KLA Corp and Lam Research are. So I'll start with CLAC. This is one of the most important companies in the global semiconductor supply chain, and they are just shocking Wall Street with quarter after quarter of explosive earnings growth. 60% growth in earnings last quarter with a 30% jump in revenue. Lam Research, also about $130 billion market cap. They're roughly the same size. Look, these are companies that do things that wouldn't occur to the average investor who's not paying that close attention within the manufacturing process that are critical. Process control, wafer inspection, etch tools, coating, cleaning, but you really can't do what NVIDIA does without these companies and the areas of chip manufacturing that they are involved with. So that's why these names have been working so far. I think what's really interesting is what we just did on tariffs and for strategic reasons, why it's so important for there to be more semiconductor manufacturing here in the United States. It's both a challenge and an opportunity for these companies. Both of them derive less than 10% of their revenue globally from North America. That's going to go up. And I think Wall Street is betting that that's going to be more of an opportunity than it will be a challenge. And that's why these stocks both look so good. I like Lam better. I think that one still has more upside potential than KLA from today's levels. But I do like both. And I do think the sector will remain in favor. In the piece I did for Pro, I put in some stop losses and where you'd want to come out of these trades. Okay. But these are both incredible looking charts.
All right, check it out on Pro, and you can see those levels that Josh is talking about. Mike Santoli's next.
to learn more.
Welcome back to the Halftime Report. Our friends at Golf Channel following the PGA Tour's latest stop. It's this week at the BMW Championship. The playoffs are underway, and reporter Kira K. Dixon joins us live from Owings Mills, Maryland, with what to expect. Hi there.
Hi there, Scott. Well, it's the second stop of the FedEx Cup playoffs. The BMW Championship is the oldest non-major event on the PGA Tour schedule. Keegan Bradley in the field, the defending champion, also the United States Ryder Cup captain. This is the last week of Ryder Cup points for Team USA to be finalized, so he's got a lot on his plate, both in the tournament and trying to make decisions of what he's going to do for Team USA. But a lot on the line here this week. Those that made it into the top 50, they have all locked up signature events for next season. That's a big deal for them. Lots of FedEx Cup points on the line, lots of money on the line. So this is a place where everybody wants to be.
All right, and we'll be watching. Kira, thank you. Kira K. Dixon joining us live from Maryland today. Be sure to follow Golf Channel's coverage of the BMW Championships tomorrow, round 1, 2 p.m. Eastern Time. Up next, Santoli tees it up. Senior markets commentator Mike Santoli is at the desk for his midday word. What jumps out to you today?
Well, so yesterday it was a little bit of an everything rally. We were talking about it, right? You had the rate cut playbook that was initiated, and that was buy smalls, buy the average stock, buy cyclicals, buy low quality, buy financials. Today it's more rotational, so you have the big caps backing off, and it's sort of the markets repairing the short-term over-concentration that everybody's been complaining about. I don't think it means it's a big decisive tidal shift involved. I'm also watching some of the risk appetite tells look a little tired. Robinhood's down 5%. Figma, the last huge IPO to open here, is down 5%, making room for Bullish probably.
Bullish is going to be up big off the
off
open.
its high, Figma. So, it sort of seems like it's not the beginning of a move, but yesterday kind of confirmed that we have the fundamental underpinnings to kind of stay supported here, and we'll see what PPI
If you're in the right spot, like Bullish appears to be right now, you're going to have a big IPO day.
They're giving you credit for being in the right
more
spot.
than double.
As I've been saying, though, what you've shown is that a lot of that frenzied demand gets satisfied on day one or day two, and then it has to find its level a little bit lower.
All right, we'll see what happens with the IPO when it opens, and we will see you again on Closing Bell. Mike Santoli. We'll do finals next.
Today.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
We're getting closer on the IPO here at the New York Stock Exchange of bullish, indicated now 89 to 90. It did price at 37. The range was 32 to 33. So you already had a pricing above, and you're going to have a really big open for this IPO, which we think is getting ever closer. May not happen in the next minute of our program, but it certainly will in the several that follow the halftime report today, and we'll certainly bring you that as soon as it does open for business. Let's do final trades. Josh Brown, what you got?
Post is down 7 points from before it reported its best earnings quarter ever. I think the stock's a screaming buy in the low 40s.
Okay, thank you for that. Sarat, what about you?
Sticking with TransDigm, I think it's really cheap at these levels.
Thank you very much. Carrie Firestone.
Thermo Fisher, it's at the 200-day moving average, and things will get better. Federal funding is restored to universities.
Okay. And Joe T.
I like you talking about the 200-day moving average. Amazon breaking out towards the upside from here.
Hey, she knows a thing or two about the market.
She sure
you just
does.
wake up.
She sure does.
She's been talking about the 200-day moving average for an awfully long time. Used to run those funds of Fidelity. Used to run those funds of Fidelity. Carrie Firestone did. Thank you, guys. We'll see you on the closing bell. We'll see what this market does in that final stretch.
Welcome to the exchange. I'm John Ford in for Kelly Evans. Stocks, well, in rally mode once again with the S&P and NASDAQ both touching all-time highs and cooling off a bit. The communications sector also at a new record, maybe in a sign of broadening. Healthcare and consumer discretionary are the leaders today. In fact, healthcare is outperforming tech this week. The hunt for a new Fed chair expands. CNBC reporting the president is now considering 11 candidates for that job, including 3 who had not previously been publicly named. We've got more on that ahead. And another big IPO today. Crypto exchange Bullish, pricing above the range and raising its offering. The company's now valued more than $5 billion, now indicated to open between, you can see it there on the screen, 89 and 90. Waiting for that stock to begin trading. We'll keep an eye on it. But we begin with the president's search for a new Fed chair. Several of the new candidates are regular guests on this network. CNBC's senior economics reporter Steve Leisman has the story. Hey, Steve.
Hey, John. Yes, CNBC has learned the Trump administration currently considering 11 candidates now. That includes 3 names not previously disclosed. All those to replace Federal Reserve Chair Jay Powell, whose term ends in May. According to 2 administration officials, the 3 new names include Jefferies chief market strategist David Zervos, former Fed Governor Larry Lindsey, and Rick Reeder, chief investment officer for fixed income at BlackRock. As John said, our viewers will be very familiar with these 3 individuals. They now join a list of 8 other candidates. CNBC's confirmed their names who are under consideration, including several current and former Fed officials, along with NEC Director Kevin Hassett and former Fed Governor Kevin Warsh, along with Mark Summerlin, a former Bush administration economic advisors. The 2 officials described a, quote, deliberative process now taking place where Treasury Secretary Scott Bessent will interview all the candidates, winnow down the list and pass it on a final list to the president for his final decision. The size of the list and the process described suggests a decision is not imminent, but the officials would not offer a timetable. President Trump has been, as you know, sharply critical of Powell's failure to lower rates on an almost daily basis, but looks to have for now backed off threats to fire the chair. While many of the candidates have advocated for rate cuts and reform at the Fed, most also have supported the Fed's independence from the executive branch. John?
All right. Steve Leisman, thank you. Tomorrow, as you can see there on the screen, we're going to have the St. Louis Fed president. But I got to make a quick pivot here from macro to micro, because Bullish, the stock was talking about right there at the open, the IPO has opened and has begun trading. I don't know if we can put it on the screen quite yet, but has it halted? It has halted. It was indicating between 89 and 90 as the exchange began. It looks like it halted at 102. So you can see there, that's quite a bit above where it priced. You can see that 176 plus %. We're going to keep an eye on that as it perhaps begins trading again. Figma had a similar situation just days ago when it opened well above where it had priced and then quickly halted. Well, back to the macro. Steve, stick with me here. Let's bring in David Wessel, Senior Fellow in Economic Studies at the Brookings Institution. He suspects that putting more names on the Fed chair potential list will put even more pressure on Powell when it comes to rate cuts. David, let's put this back on the screen here. These Fed chair candidates for just a moment. It looks like a choir all singing against what the Fed chair, Jay Powell, has been doing, and perhaps in support of President Trump's call for rate cuts. What do you expect the impact of this large field to be?
Well, first of all, I'm a little suspicious of this list. Lori Logan, for instance, the Dallas Fed president, has been pretty hawkish. It's hard to believe the president is going to put her on the board. And the current vice chair, Phil Jefferson, has been pretty low profile. He's a Biden appointee. He's been aligned with Jay Powell. So I wonder what this is all about. One possibility here is that Secretary Bessent is putting names up there, and then that encourages people who think they have a shot, either at the chair's job or maybe a seat on the board, to write or speak out in support of the president's call for lower interest rates. Mark Summerlin wrote an op-ed the other day endorsing the president's call for lower rates. So I'm not quite sure what to make of this, but I agree with Steve. It does suggest that a decision isn't imminent. I just don't really believe all 11 of these people are serious. I would, however, like to see David Zervos as the Fed chair. He'd be the Fed chair with the longest hair since the history of the Federal Reserve, since 1913. So that would be at least something to talk about.
That is true, and perhaps the most facial hair in a while as well. Steve Leisman, is this perhaps that situation that a lot of job seekers have become familiar with, where maybe the hiring folks already have a pretty good idea of who they have in mind, but they post the job anyway and make it look like there are a lot of potential candidates?
Yeah, there's some speculation that Scott Bessent pulls a Dick Cheney, which you may remember, John, was when he was interviewing for George Bush's vice presidential candidates and ended up picking himself. But I don't know if that's the case. You'll remember the president removed Bessent, or said Bessent had removed himself. What's interesting about that, John, is that somebody told me that it's not really Bessent's call to remove himself, that if the president wants Bessent to be Fed chair, that's entirely possible. I think the latest probabilities showed, or the latest betting showed Waller being a leading candidate. That would be an interesting one. I think David's right. There are people who should be taken seriously on this list and people perhaps less seriously, and why they're on the list is unclear to me. Phil Jefferson is, I believe, not going to go out and change his very non-public demeanor and start writing positive op-eds about the Trump administration's economy or how he's going to cut rates apart from whatever the Fed chair, Jay Powell, wants. So it is interesting. I would say if I looked at that list, Zervos is a huge possibility. He's also, along with Jay Powell, have something in common. They've both been to Dead and Company shows, for what that is worth. Kevin Hassett and Kevin Warsh began as probably the two favorites. It's an interesting idea. I wonder what Wessel thinks of this, that the list has expanded beyond those two, suggesting that maybe the president is not happy with either either of those two or just having those two along with Waller on the list.
David Wessel, is it that, or perhaps that he's expanding the search beyond the chair to whoever he might nominate next?
Right. So I think Steve's right. I wouldn't rule out Scott Bessent as the guy who gets the job in the end. I think the other thing to think about here is the president's going to have a couple of opportunities to put people on the board of governors. There's the Kugler seat that he's filled temporarily with Steve Mirren. Presumably Jay Powell leaves. There's a seat there. And then there are other governors who may or may not stay. And so some of this may be trying people out for seats on the board of governors. If, for instance, Michael Barr decides to leave, or Chris Waller, if he doesn't become chair, decides to leave. So I think there's a lot of balls in the air here and a lot of trial balloons.
Steve Leisman, is your sense that this gives the president a better sense of who's going to do exactly what he wants?
You know, John, you're asking a question that I'm asking myself, which is what exactly does the president want in a Fed chair? Does he want somebody who is loyal to him, or somebody who exercises independence, somebody who has the confidence of markets? You know, there are some on that list who seem a little bit more to be a loyalist to the president than they would perhaps be to the institution of the Federal Reserve. So that would be an interesting choice, somebody who has been more promotional for the president than they are perhaps steeped in the economics and expertise of monetary policy. And I don't know. I mean, I do think this process, to the Treasury's credit, the idea that it is a large list of people who are being considered, and a diverse group, it does speak well that such that a process that is transparent and one that we know about in terms of who the finalists are, that could be one that whoever is picked gains the confidence of markets. That I think Scott Bessent has that confidence of markets, such that somebody who he ends up recommending to be Fed chair would help markets have that confidence in the next Fed chair.
David Wessel, adding this moment and this large field that we've got into the interactions that we've seen President Trump have with the Fed as an institution over the past several months, how does this advance the narrative? I mean, I had people who I know who never pay attention to monetary policy or the Fed very aware of that hard hat scene of the president visiting the Federal Reserve a couple weeks back.
Yeah, so I think you're right. I think that the president is obviously interested in putting some pressure on the Fed to lower rates, and he seems to be determined to make life as miserable as possible for Jay Powell in his remaining months. I wonder, though, how much of a deliberative process this is. I mean, we haven't seen any evidence that the president actually does something in a deliberative way. Look at how he picked the new BLS commissioner. So I think this may be a bit of Scott Bessent trying to reassure us that there's a process. And I think he's trying to make life as uncomfortable for Jay Powell as possible, and he's doing a hell of a job. Although my view on that hard hat scene is that was one that Jay Powell, much to my surprise, fought the president at least to a draw, and maybe if not a win on live TV, which is not something that's easy to do with Donald Trump.
Live TV looks easy, but it's not.
Hey,
David Wessel.
David.
Yeah, Steve?
Yeah.
Just real quick, you know, in the first Trump administration, they ran a pretty tight ship and process for picking the Fed governors they ended up with until they didn't. You remember there were sort of two phases of that. One went through a process, the other seemed to be off the cuff. So it is possible that they do run a deliberative process here, but there's also, I think, backup for what you said, which is the president reads an op-ed and decides that he wants that person on the Federal Reserve Board.
Exactly. There's less process in the second term than there was in the first, for sure.
All right. David Wessel, Steve Leisman, thank you. Well, let's take another look at the IPO of the day. Bullish. It is trading again. Opened at $90 a share after pricing above the range at $37. Halted almost immediately for volatility, but here it is trading again. It halted first at around 102. Now it's trading a little bit above that level. Of course, we'll keep our eye on that. Crypto is hot and many things associated with it. Meanwhile, the NASDAQ and the tech sector hitting all-time highs today as the sector continues to dominate. Since the April lows, tech has risen more than 50%, outpacing every other sector. So is tech the only game in town? Our next guest doesn't think so. He's got some alternative stock ideas that have similar characteristics to the mega cap winners but are outside the sector. Joining me now is Michael Kantrowitz, Chief Investment Strategist at Piper Sandler. Michael, welcome. Give me your best ideas.
Hi, good afternoon.
Yeah.
Good afternoon. So the tech sector has obviously done great, but very few investment managers can only own the tech sector, even if it is the best performing area. So we've been focused on really the last couple of years, as tech has been leading, trying to highlight stocks outside of the tech sector or in addition to the tech sector that have similar attributes, that are somewhat part of the family of companies that are growing earnings, that have high profitability, strong balance sheets. That's really, in our opinion, been the recipe for outperformance, not only within tech, but beyond that sector and across the market, even down to small caps, I would argue.
Now, I want to take a pause and talk about tech for a moment, because I wonder if the idea of tech as an umbrella group is sort of outliving its usefulness, because software, which people think of when they think about technology, a lot of software, especially beneath the surface of the very biggest names, has not been performing well lately at all. So are there more discrepancies between how different groups, software, semis, different sizes of companies within these groups are performing nowadays?
Yeah, you're going to see that within most sectors. I think the back and forth between hardware and software. Geez, I remember that going back all the way to 2000, and so it's obviously a big part of the AI story now, and how much of the software sector is going to be disrupted. But in